The story of Bitcoin begins during a time when many people were losing trust in banks and traditional financial systems. In 2008, the world was facing a major financial crisis. Large banks were collapsing, businesses were failing, and millions of people were losing their jobs and savings. During this uncertain time, a mysterious person, or possibly a group of people, introduced a completely new idea for money on the internet. This person used the name Satoshi Nakamoto. In October 2008, Satoshi Nakamoto published a document called the Bitcoin White Paper. This paper explained a new type of digital money that could work without banks or governments controlling it. Instead of being managed by a central authority, Bitcoin would run on a network of computers around the world. These computers would record every transaction in a public digital ledger known as the blockchain. The system was designed so that anyone could verify transactions, but no single person could control the currency. In January 2009, the first Bitcoin block was created. This event is called the Genesis block, and it marked the official birth of Bitcoin. At that time, Bitcoin had no real monetary value. It was simply an experiment shared among small groups of programmers and technology enthusiasts on internet forums. People who were interested in cryptography and digital privacy were especially curious about the project. Early users of Bitcoin helped run the network by mining. Mining involved using computers to solve complex mathematical problems. When a computer successfully solved one of these problems, it helped confirm transactions on the network. As a reward for this work, the system created new Bitcoins and gave them to the miner. In the early days, mining Bitcoin was much easier than it is today. Some people could mine hundreds or even thousands of Bitcoins using ordinary home computers. At the time, very few people believed Bitcoin would become valuable. Most early users saw it as a fun experiment or an interesting piece of technology. They traded Bitcoins with each other online, often without thinking much about the future value of the coins. Some people collected large numbers of Bitcoins simply because they enjoyed supporting the project. One of the most famous early events in Bitcoin history happened in 2010. A programmer named Laszlo Hanyecz made what is believed to be the first real-world purchase using Bitcoin. He paid 10,000 Bitcoins for 2 pizzas. At that time, the coins were worth only a small amount of money. But years later, those same Bitcoins would be worth hundreds of millions of dollars. The story became legendary in the cryptocurrency community. As more people began learning about Bitcoin, small online communities started forming around the technology. Programmers, investors, and technology fans discussed the future of digital currency and how it might change the financial system. Although the project was still very small, its ideas were powerful. Bitcoin introduced the concept of a decentralized currency, money that could move across the internet without banks, borders, or middlemen. For some people, this idea represented financial freedom. For others, it seemed risky and unpredictable. In those early days, no one truly knew what Bitcoin would become. It was just a new experiment created by an anonymous inventor. But this small project was about to grow into one of the most talked about financial innovations in the modern world. Soon, Bitcoin would start turning ordinary people into millionaires almost overnight. In the early years after Bitcoin was created, very few people understood what it was. Most of the world had never heard about digital currency, and many people believed the idea would never work. However, a small group of programmers, technology enthusiasts, and online investors became curious about Bitcoin. These early adopters were willing to experiment with the new technology even when it had almost no value. During this time, Bitcoin could be mined easily using normal home computers. Mining was the process of using computing power to confirm transactions on the Bitcoin network. When someone successfully mined a block, they received new Bitcoins as a reward. Because there was very little competition, some people were able to collect thousands of Bitcoins without spending much money. At that time, these coins were worth only a few cents. So many people did not think they were valuable. Online communities played an important role in spreading the idea of Bitcoin. Programmers and early supporters discussed the technology on internet forums and small websites. One of the most important places for these discussions was the Bitcoin Talk Forum. On this forum, users shared ideas, solved technical problems, and talked about the future of digital currency. Many of the early Bitcoin believers met and exchanged ideas in these online communities. One famous story from this period shows how little Bitcoin was worth in the beginning. In 2010, a programmer named Laszlo Hanyecz made the first known purchase using Bitcoin. He paid 10,000 Bitcoins for 2 pizzas. At the time, this seemed like a normal trade between members of the online community. But as Bitcoin grew in value, that simple pizza purchase became one of the most famous moments in cryptocurrency history. As interest in Bitcoin slowly increased, the first cryptocurrency exchanges started appearing. These websites allowed people to buy and sell Bitcoins using traditional money. One of the earliest and most important exchanges was Mt. Gox. Through these exchanges, Bitcoin slowly began gaining a real market price. For the first time, people could measure the value of their digital coins in dollars. As the price of Bitcoin started rising, early adopters realized that their coins might become very valuable. Some people who had mined thousands of Bitcoins suddenly found themselves owning assets worth large amounts of money. A few investors began buying Bitcoins simply because they believed the price would continue rising in the future. Even though Bitcoin was still a small and experimental project, excitement began spreading through technology communities. Stories started appearing about people who had made huge profits from their early investments. These stories attracted new investors who hoped to achieve the same success. However, many people still believed Bitcoin was risky. Governments did not fully understand it, banks did not support it, and its price could change quickly. Despite these uncertainties, the early believers remained confident that Bitcoin represented a new kind of financial system. What started as a small internet experiment was slowly turning into something much bigger. As more people joined the network and more money entered the market, the value of Bitcoin began rising faster and faster. Soon, the world would begin noticing the digital currency, and a new generation of Bitcoin millionaires would appear almost overnight. After several years of slow growth, Bitcoin suddenly began attracting global attention. What started as a small experiment among programmers was now becoming a major financial story. Around 2013, the price of Bitcoin started rising quickly. It moved from just a few dollars to hundreds of dollars within a short period of time. This sudden increase surprised many people and brought Bitcoin into the global spotlight. As the price continued to rise, news media around the world began reporting on the digital currency. Television channels, newspapers, and technology websites started talking about Bitcoin and its potential to change the financial system. Many people became curious about how a digital coin created by an unknown person like Satoshi Nakamoto could suddenly become so valuable. The rising price of Bitcoin created exciting stories about ordinary people becoming rich. Some early adopters who had mined or bought Bitcoins when the price was very low suddenly discovered they were millionaires. A few investors who had spent only a few $100s on Bitcoin now owned coins worth millions. These stories spread quickly on the internet and attracted even more people to the cryptocurrency market. During this time, many new investors began buying Bitcoin because they believed the price would continue rising. Cryptocurrency exchanges such as Coinbase made it easier for people to buy and sell digital coins. Instead of needing technical knowledge, new users could simply create an account and purchase Bitcoin with traditional money. The excitement surrounding Bitcoin also encouraged the creation of many other cryptocurrencies. Developers began launching new digital coins inspired by Bitcoin's technology. One of the most famous alternatives was Ethereum, which introduced new features that allowed developers to build applications on its blockchain network. Soon, thousands of new cryptocurrencies appeared in the market. By 2017, Bitcoin experienced one of its biggest price explosions. The value of one Bitcoin rose from around $1,000 at the beginning of the year to nearly $20,000 by the end of the year. This incredible rise created a wave of new Bitcoin millionaires across the world. Many young investors and technology enthusiasts suddenly found themselves with enormous wealth. the rapid growth also created a strong feeling of excitement known as crypto hype. People believed that cryptocurrencies would replace traditional banks and become the future of global finance. Social media was filled with stories of investors making huge profits in very short periods of time. Many people rushed to invest, hoping to become rich as well. However, this fast growth also created risks. Some investors were buying Bitcoin without fully understanding how the technology worked. Others invested money they could not afford to lose. The market became very emotional, with prices rising and falling quickly based on news and speculation. Despite these risks, the Bitcoin boom changed the financial world. Digital currency was no longer just an experiment. It had become a global financial phenomenon, attracting investors, companies, and governments. But as history often shows, markets that rise very quickly can also fall just as fast. The same boom that created thousands of Bitcoin millionaires was about to reveal the darker side of cryptocurrency wealth. As the value of Bitcoin continued rising, more people entered the cryptocurrency world hoping to make quick profits. The market was full of excitement, but behind the success stories, there were also many serious dangers. Because Bitcoin was still a new technology, many systems were not fully secure, and many investors did not understand the risks involved. One of the biggest problems was hacking. Cryptocurrency is stored in digital wallets, which are protected by private keys. If someone loses their private key, or if hackers steal it, the Bitcoins can disappear forever. Unlike traditional banks, there is usually no way to recover lost cryptocurrency. Over the years, many investors lost millions of dollars simply because they forgot passwords or lost access to their wallets. Another major problem involved cryptocurrency exchanges. These exchanges allowed users to buy and sell Bitcoin, but some of them were poorly managed or had weak security. One of the most famous examples was Mt. Gox, which was once the largest Bitcoin exchange in the world. In 2014, the company suddenly collapsed after losing hundreds of thousands of Bitcoins. Many users lost their money, and the event shocked the entire cryptocurrency community. As Bitcoin became more popular, scammers also began entering the market. Some criminals created fake investment programs that promised extremely high profits. These scams often convinced inexperienced investors to send their money to fraudulent companies. Once the scammers received the funds, they disappeared, leaving victims with nothing. Another issue was the extreme price volatility of Bitcoin. The value of the cryptocurrency could rise or fall very quickly within hours. While this volatility allowed some investors to make large profits, it also created huge losses for others. Some people invested large amounts of money during price peaks and then watched the value of their investments fall dramatically. Governments around the world also started paying attention to Bitcoin. Some authorities were worried that cryptocurrencies could be used for illegal activities such as money laundering or online crime. Because of these concerns, some countries began creating regulations to control how cryptocurrencies were traded and used. This created uncertainty in the market and caused prices to change rapidly whenever new laws were discussed. Despite these problems, many investors continued believing strongly in Bitcoin. Supporters argued that every new technology faces challenges in its early stages. They believed the system would become stronger and safer over time as more developers improved the technology. However, the dark side of cryptocurrency wealth was becoming clear. Behind the stories of sudden millionaires were also stories of people losing fortunes. Some investors lost money through hacks, scams, or poor decisions. Others watched their wealth disappear during sudden market crashes. The world of cryptocurrency was exciting but unpredictable. The same technology that created incredible wealth could also destroy it overnight. As Bitcoin continued growing, the market was preparing for one of its most dramatic moments, a major crash that would test the confidence of investors around the world. After the incredible rise of Bitcoin, many people believed the price would continue increasing forever. Investors around the world rushed into the cryptocurrency market, hoping to become the next Bitcoin millionaire. By late 2017, Bitcoin reached an astonishing price of nearly $20,000 for one coin. The excitement was everywhere. News media, social media, and online forums were filled with stories about people making huge profits. However, financial markets often move in cycles, and the cryptocurrency market was no different. Soon after reaching its peak, the price of Bitcoin began to fall. At first, many investors believed the drop was only temporary, but the decline continued for months. The price slowly dropped from thousands of dollars to much lower levels. By 2018, Bitcoin had lost a large part of its value. Investors who had bought coins at very high prices suddenly saw their investments shrinking quickly. Some people who had once believed they were millionaires watched their fortunes disappear almost overnight. The same market that had created incredible wealth was now destroying it. The crash created panic across the cryptocurrency community. Many investors began selling their coins quickly because they feared the price would fall even more. This type of panic selling caused the market to drop even faster. The excitement that once filled the crypto world turned into fear and uncertainty. Some investors made mistakes during this period. Many people had invested more money than they could afford to lose. When prices started falling, they faced serious financial problems. A few individuals had even taken loans or used savings to invest in Bitcoin during the peak of the market. When the crash came, they were left with large losses. Another problem was emotional decision-making. Many investors had become too confident during the boom. They believed prices would always rise, so they ignored the risks. When the crash happened, they did not know when to sell or hold their investments. Some people sold their coins at very low prices out of fear, only to see the market recover later. Despite the losses, not everyone left the cryptocurrency world. Some investors remained confident in Bitcoin's long-term future. They believed the crash was simply part of a normal market cycle. Supporters of Bitcoin argued that many new technologies experienced strong price swings before becoming stable. The crash also helped remove some of the hype from the cryptocurrency market. Investors began paying more attention to security, technology, and long-term value rather than quick profits. Governments and financial institutions also started studying cryptocurrencies more seriously. Although many fortunes were lost, the Bitcoin story did not end with the crash. The cryptocurrency continued to exist, and its price slowly began recovering over time. New investors entered the market, and the technology continued evolving. The rise and fall of Bitcoin millionaires showed how unpredictable the world of digital finance can be. Great wealth can be created quickly, but it can also disappear just as fast. Yet the biggest question still remained. Was Bitcoin only a temporary trend, or was it the beginning of a completely new financial system? After the dramatic crashes and the stories of lost fortunes, many people believed the era of Bitcoin was over. Critics said the digital currency was only a temporary trend that had already reached its peak. However, something surprising happened. Instead of disappearing, Bitcoin slowly began rising again. New investors started entering the market, and interest in cryptocurrency continued growing around the world. One important change was that large companies and financial institutions began paying attention to Bitcoin. In the early years, most traditional banks and corporations avoided cryptocurrency because they believed it was too risky. But as the technology matured, some major companies started investing in Bitcoin or accepting it as a form of payment. This helped increase confidence in the cryptocurrency market. Another important development was the improvement of cryptocurrency infrastructure. New exchanges, digital wallets, and security systems were created to make Bitcoin safer and easier to use. Companies like Coinbase helped millions of new users buy and store Bitcoin more easily. These improvements made cryptocurrency more accessible to everyday investors. Governments around the world also began studying how to regulate digital currencies. Some countries introduced rules to make cryptocurrency trading safer and reduce illegal activities. Other nations explored the idea of creating their own digital currencies. While regulations sometimes created uncertainty in the market, they also showed that governments were starting to take cryptocurrency seriously. At the same time, the price of Bitcoin continued experiencing strong ups and downs. Cryptocurrency markets remained very volatile, meaning prices could change quickly within short periods. Some investors made large profits during price increases, while others faced losses during market corrections. Despite these fluctuations, Bitcoin continued attracting attention from both investors and technology experts. Another reason for Bitcoin's lasting influence is the technology behind it, known as blockchain. Blockchain allows transactions to be recorded securely without needing a central authority like a bank. Many industries began exploring how blockchain could be used for different purposes, such as finance, supply chains, and digital security. This technology became one of the most important innovations of the digital age. The future of Bitcoin remains uncertain. Some experts believe Bitcoin could become a major global asset similar to gold. Others believe new cryptocurrencies or technologies might eventually replace it. What is clear is that Bitcoin has already changed the way people think about money and digital finance. For many investors, the dream of becoming a Bitcoin millionaire still exists. Stories of early adopters who became extremely wealthy continue inspiring new generations of crypto enthusiasts. However, the lessons from past crashes remind investors that cryptocurrency markets can be unpredictable and risky. The rise and fall of Bitcoin millionaires shows how powerful and unpredictable innovation can be. A digital currency created by the mysterious figure Satoshi Nakamoto grew from a small online experiment into a global financial phenomenon. Whether Bitcoin becomes the future of money or simply one chapter in financial history, its impact on the world is undeniable. The story of Bitcoin is still being written, and the next generation of investors may once again rise or fall with the fortunes of this digital revolution.